Hi everyone, my name is Mary Redmond and I'm talking about the Euro-US dollar right now. A lot of people are really excited about this pair, and this week it does look like it could be making the beginning of what could be a real trend change, and the type of trend change a lot of people have been waiting for. We've got a couple of indicators that are starting to point to the downside. You had the S&P today with very weak response, very weak follow through. You have what looks like some divergence right here on the stochastic indicator. You also have here on a smaller time frame some of these indicators that I look at making bearish crosses. It looks here like the 8-day ARSI moved below the 23-day. You've also got the 10-day moving average going below the 50-day moving average. So it looks like the and the 149 level was a very difficult level to cross, so it's hard to call a top, of course, but if the ECB rate decision press conference and the employment report turn out to be both euro bearish and dollar bullish, then we could have a good strong move down this week. And the markets are not predicting that the ECB will raise rates again, so it depends largely on the press conference. And sometimes Mr. Trichet likes to tip his hand in terms of what he's going to do in the future meetings, and sometimes he doesn't. But since the total growth rate in the EU is only expected to be around 1.6% this year, and they still do have a persistent problem with some of the disparities in the sovereign debt pricing, they may want to hold off on interest rates for a while. Of course, the markets will predict that the ECB is going to raise rates 3 or 4 times this year, but it's really too far in advance to predict what the inflationary indicators are going to be a few months down the line. So the more important report is probably going to be the U.S. employment report on Friday. And it's going to be important that the employment report shows the same consistent level of job growth and a decrease in unemployment that it has for the last few months, because otherwise people are going to start speculating or start making rumors that the Fed's going to continue this quantitative easing ad infinitum. But if the employment report does show steady growth, then the real issue is going to be whether or not the pretty big institutions in the market are going to start preparing for the removal of this excessive stimulus that the Fed has been flooding the markets with. And of course the Fed never really wants to shock the bond markets, so they're going to be talking, what they did talk about was gradually removing the stimulus, keeping the securities on their balance sheet, probably not raising the Fed funds rate for another 6 months, but incrementally they're going to remove it. They don't want to shock the bond market. They don't want yields to just explode upward. But people who are looking ahead, like the major institutional investors, are generally anticipating that interest rates are going to be going up in the U.S. in the second half of this year. So this is the week that could be the turning point for the Euro-US dollar. It's probably not a good idea to jump the gun, but we want to see how it trades this week after those 2 meetings and how it closes. And if it closes so it looks like there's a true reversal with a big bearish candlestick on the daily or weekly chart, then it would be a very good short, possibly to hold into the coming weeks. And an important date to watch is going to be May 12th, because May 12th is going to be the day at which the Fed is going to release their next schedule of monthly purchases of treasuries. So if they end the program May 12th, then you've got that floor and that support underneath the market that isn't going to be there anymore. If they continue it for another month, they continue until June, it may just drag the process out and keep it a little bit longer. But the trends usually do accelerate towards the end, and you'd have to see if you get a really big capitulation and a really big short squeeze. And it looks like we did have something of that last week. We did have a slight acceleration in the trend. So those are going to be the key critical meetings to watch this week, and I favor the short at 49, so that's what I'm looking at right now.